Okay, everybody, it is me, Gregory Mannarino. It is still Tuesday, August 10th, 2021. We made history today, yet again, and it just seems like a never-ending cycle. I'm talking about the market. A new all-time record high for the Dow Jones Industrial Average, a new all-time record high for the S&P 500. However, the NASDAQ did fall under some pressure. All right, whatever. All you need, seriously, is the promise of, well, at least another $1 trillion being created out of thin air, borrowed into existence, this infrastructure bill. Global debt surging at its fastest pace ever in history, and it's going to accelerate from here. We'll talk more about that. And more bad economic news. We found out that productivity here in the United States is in fact slowing down. Can you possibly imagine my shock? I don't think you can. No, we all knew this already. Again, I've told you all ahead of this where we're going, how this is going to play out, where the market is going to go, the continued bad economic news, the continuing borrowing of epic sums, creating it out of thin air, how that's going to continue to fuel this risk-on environment until it doesn't. But I expect this to get monumentally bigger. The hyper bubble in debt, which will push stocks even higher as our economy craters. All right, so now that we got that out of the way, new record high for the Dow, new record high for the S&P 500. Did you see crude oil today? This is a big factor. Yes, we got this, $1 trillion infrastructure bill. We got the IMF pumping, these SDRs around the world. Sure, we're going to talk more about that too. So the debt is hyperinflating. We all knew that already. What's changed here? Nothing. Crude oil getting re-propped up, putting on like 3% today. No surprise to you. I told you this was going to happen. It's going much, much higher. There's no doubt about it. So forget about any. I know people are writing to me, "Oh, Greg, you're wrong on crude this time. It's going much, much lower." Duh. How about no? I don't know what else to tell you, people. I understand that most of you have regular jobs that you work at, and I have nothing against that. We all got to do something, but this is all I do is the market. So when you try to get into a conversation or argument with someone that lives and breathes this around the clock, more than likely you're going to be wrong. I consider myself a cutting-edge professional with regard to the market and everything connected to it. And I think if you've been with me for any length of time, you'd have to say, wow, that's pretty true. Anyway, so massive turnaround in crude oil. You're watching that 10-year yield. I told you. We got a 1.34 10-year yield. Why is that? Why is it coming up? Well, cash is now seeking risk. Okay, seeking the safety of the debt market. Again, you know how this works. When cash is afraid or fearful, it goes into the perceived safety of debt. Henceforth, 10-year yield drops. 10-year yield rising tells us cash is now looking to escape the perceived safety of debt and get into the stock market. Henceforth, why record highs? Especially keeping your eye here on crude oil. Now, the dollar, not too much. The dollar put on a fractional amount of strength today. So we got crude oil getting bid much higher today. 10-year yield coming up. Okay, risk now is off. Cash going back into the stock market. The dollar, okay, little strength here. The market doesn't really like that. And of course, the hyperinflating debt. So that's where we are, and that's why the market put on gains today. Period. The freaking end. So you got the big picture. Let's move forward here. Gold and silver, after this pretty hard sell-off, did catch a little bid today. I'm telling you what's going to happen. They're going to trade sideways for a little bit. Expect some more volatility here before they get bid higher. Actually, I can't even say that. The game here that is being played by the largest bank on the planet, this is JP Morgan, against precious metals is truly unbelievable. There's no price discovery, you know that. the hard asset is deriving value from a derivative for which JP Morgan is pulling the derivative every way they want to. They just yank it this way, yank it the other way. It doesn't matter. So you and I are going to embrace this while we can and weaponize it against, JP Morgan and other Wall Street banks, world banks that are rigging the price of precious metals here. Let them play their game. We will play ours. Okay? We understand the debt is going to hyperballoon. This $1 trillion infrastructure, well, there's going to be more. Look, you're going to see things moving forward you're not going to believe with regard to inflating not just the debt here in the United States, but global debt. Let's talk a little more about that. All these people writing to me about the IMF and these SDRs, I know where it's coming from. Lynette Zhang, I love her. It's the truth. She's getting a little over hyper about this whole thing. Again, nothing against this woman. She's insanely smart. She knows exactly what she's doing here. I understand where she's coming from too, trying to tell all of you to get yourselves into precious metals against global debt. So let's back up a moment here. The International Monetary Fund, the IMF. Okay, I think we've all heard of the IMF. SDRs are the currency of the IMF. Okay, I think, and I could be wrong on this, that most of you have an idea slightly of these special drawing rights, basket of currencies. This is derived from that basket of currencies for which SDRs are derived from this basket of currencies of which the U.S. dollar is a part of. SDRs are already considered kind of a supplemental world reserve. Okay, this is no secret. It's no secret. So you have the U.S. dollar as a world reserve, and yes, you got these SDRs as a supplemental world reserve, and that's the way it's going to be. You have to understand that. It's always a 1-2 punch. So again, so there's 650 billion in SDRs that are going to be distributed among members. It's like a drop of water in the Great Lakes here. When we're talking about debt in the quadrillions, the multiple quadrillions, 650 billion, it isn't going to even register on a Richter scale. It's not a blip on a radar screen. It's a zero. You understand? But what it does mean is global debt is going to hyperinflate. And you all knew this before. I mean, it's not just the Federal Reserve. I've told all of you for years, this is world central banks, including the IMF, which I've spoken about many, many times throughout the years. So please stop writing to me about the IMF and the SDRs. I know all about it. And so should you. This is nothing new. This is nothing different, okay? It just means you need to bet against the debt. Become your own central bank even more so now if you become aware of this. Anyway, I wrote a bunch of stuff down. I want to cover that with you. So I covered this whole thing with the SDRs and the IMF and the inflating debt and the bad economic news from today. What else did I write down here? I already spoke about all this. And the bad economic news. U.S. Production is falling off of a cliff. No surprise. No surprise. Again, you know most things before they're announced in the news. Because I tell you before it's announced in the news. And look, I am no smarter than you. Really, I'm not. I just study this stuff around the clock. It's like, to me, it's all very simple. It's cause, effect. Cause, effect. And we all do, I think, those of you that follow this blog, realize what's actually going on here. This is a global takeover. They are deliberately and doing whatever they can to continue to inflate debt. These central banks, the IMF, they're not done. I keep telling you that. Henceforth, why the stock market keeps going up in an environment of like we have here, an economy in free fall with debts and deficits hyperballooning with no possible end in sight. So ignore the nonsense out there with central banks talking about tapering, or these freaks from the Fed say, we're going to taper sooner than later. They know they're not going to do it. They know it. They're just saying this because it's a game they play. I covered this morning. People, with regard to global debt, the IMF, these SDRs, the Federal Reserve, and all these other world central banks, we haven't even begun to see the beginning of this, okay? And this is a worldwide phenomenon. I'm telling you, this is the new world order. I've been telling you this for years. You don't want to believe me? You don't think this is what's actually going on? You think the puppets right now in Washington, you think they're really pulling the strings? It's funny. Where are they getting this $1 trillion in cash from for this, infrastructure? Very interesting, isn't it? How about they're going to borrow it from the Fed because we don't have it? We're broke. We're broke. Then the Federal Reserve or the IMF is more than willing to supply more debt. That's all this is, the IMF right now. Let me shut that off. I'm not allowed to be saying these things, so they don't want you to hear about it. Anyway, here, so people say, you got the picture. You understand clearly what's going on actually before you hear it from the actual news outlets that are so far behind the curve. And I've promised to keep you ahead of the curve, and that's exactly what I have done. All right, people, look, this guy here loves you a lot. Very important video. Very important video. Please get it out there. Please share this video, and I will see all of you in the morning.